entire thing which I and the entire firm breathes day in, day out. Mid-market, or in a very regular layman parlance, as we call it, as MSMEs, is I think everybody here would understand and would know that that is the segment which is driving the Indian economy. By numbers, it's quite staggering, as MSMEs today are close to about 7 crore registered MSMEs in the country. 30% of India's GDP is driven by MSMEs. Close to about 45% of our industrial production is driven by MSMEs. So, which Kapil speaks about the growth of the small entrepreneurs and the medium-sized entrepreneurs. It's staggering what they are contributing to the economy. Another set of numbers is on the employment generation front. So 11 crore close to employment, which is next to agriculture, is being employed by the MSMEs. And to make a very important point, the highest number of women employment is done by MSMEs. So MSMEs are at the heart of what India is. I think they define what Bharat today is and what Bharat in future would be. But the most important challenge which we face, and to your question, to drive the growth of these medium, small, medium, micro, small and medium enterprises, I think there are two major things which we work day in, day out to figure out with these companies. I think one important factor is corporate governance, and second is the financial discipline. So corporate governance, as many of the entrepreneurs here in this room would have seen and observed, and companies are growing, there is a lot of shortcuts as far as they make, as far relate to the filings with the CAs, the taxes, etc. The compliances as far as their employees are concerned, their factories are concerned. So it's very important for advisors and firms and investors like us to work with these companies to ensure that they transform into a highly compliant company. The second part is around capital structuring, wherein whatever said and done, and to your first question on the banking and the relevance of banking in the entire Indian corporate setup. Sorry to say, but I think banking has been one of the biggest factors which has led to the MSMEs not able to reach their growth potential, and as a result of that, our majority of the time goes in guiding these companies to become more equity friendly. Banks are not, or debt is not an ideal or will not be an ideal go-to platform for them. So they need to become sizable enough, smart enough, and clean enough to attract equity capital. So work with them towards their equity journey, whether from private equities, or from public markets. The government has done extremely well in bringing something like an SME platform to ensure even the smallest of small companies who are doing well have something like an SME platform to go and raise capital from. And the results have been fantastic. It's not just theoretical. If we see the last 7 years CAGR of earnings of large cap companies, it's about 14%. So profit growth of large cap companies in the capital markets have been just 14.5% over the last 7 years. In the same time, the mid cap companies have given a CAGR of earnings of about 21%. The small cap companies have given an earnings CAGR of 28.5%. And micro cap companies have given earnings CAGR upwards of 40%. So numbers are staggering. So, if given an opportunity, and if, as they are, on the main exchange and in the public markets, these companies are showing their mettle. So it's an important journey to guide the companies and to take them to the right channel to raise capital, and that's an important platform which we kind of work towards. Thank you.
In some form. As they say that fisherman follows the fish and fishes on the sea where the fisherman follows them. But all we need is a marketplace for everything we have. If there's no marketplace, nothing happens. So this question is more directed to Jayashree and Rishi, but others can pitch in. Recently, RBI has indicated that banking sector is too open for M&A funding, which is a special skill. Do you think that banks are today equipped with this? That is the first question. And what level of banks should consider this? Because all small banks may not be, say, ready for this change. So any views on this?
Yeah, first of all, I should say it's a very welcome measure that RBI is saying that will open up the M&A funding to the banks. I think this definitely is a positive way forward, and based on my interactions and discussions, I think we still have some way for the banks to be really, really ready to get there. The larger ones, more progressive ones, and very well-run mid-sized banks are going to be the first who will get in. And over a period in time, we would see the other banks also getting into the M&A funding. But initially, it's going to be the large banks and the very well-run mid-tier banks in my assessment.
Okay. Thank you. Yep.
I echo Jayashree's thoughts. I think that's right. I think it is a welcome step. I think it's a win-win for the entire ecosystem. I think it opens up new avenues for growth for banks. This is a segment where you can actually earn a lot of fees as well. So I think the revenue pool for the banks actually goes up a lot. I think it also provides a significantly large opportunity for companies to get sources of funding for acquisitions, which historically have been very constrained. And I think given this, as Kapil mentioned, this is the largest pool of capital available in India, given other forms are still nascent and evolving. I think it does spur the M&A market. I also agree with Jayashree. I think it's a very specialized capability. I think it will take a long time for a lending institution to build the confidence and the conviction to lend for a particular purpose as this. I think the risks are different, the underwriting is different, so I think building that capability will take its own time and its own journey. And while it's a welcome step, I still think we're a long way from when banks really open the floodgates into lending for acquisitions.
Thank you, Said. But it's as an industry feel, it's a very, very welcome move. What time and in what manner we start is yet to be seen, but I hope it goes well. So,
Rajesh, can I add something on this?
Of course, please.
So, because this was the question which was asked, to us in the private credit industry. At least 5, maybe 10 people, reached out to me and said, what is acquisition financing going to do to the private market? Because if the banks are going to do what AIFs is supposed to do, what happens to this? And the real, and I have a slightly different take than both Rishi and Jayashree, that in the format, the way banks have been allowed to do acquisition financing, if you read the final formal circular, this acquisition financing is actually almost like a balance sheet financing, because you're supposed to be a listed entity, you're supposed to have a balance sheet, and then you lend. I think project financing, which banks do traditionally, is a far more riskier and difficult job than doing dumb acquisition financing at the main company. So I think this should not have been a restrictions to begin with. Thank God banks have recognized, RBI has recognized and done this. I think what is trickier is, which is still not prohibited, is promoter financing, bespoke structured financing, leverage buyouts. I think those are still holdco with no cash flows financing, unlisted company financing. So those markets are still available to us, and we are happy that, that market is. In any case, for the smaller companies, banks don't move fast. For the smaller companies, for companies like, what Jayashree represents, for larger companies, billion-dollar market cap companies, banks anyway typically have found ways to do all kinds of financing which they wanted to do. So it is a material change. It should have been done much earlier, but, it's happening now.
No, thank you. Thank you for adding this up. So friends, on the governance part again, if coming to governance, because governance is very, very closely linked with what a private equity fund or a bank think about that company. And all of us know that SME have their challenges on governance also. As they say, the heart is willing, but the body is weak. At times, when you talk to, say, promoters, they say that they wish to follow the highest possible standards of governance. But then when it comes to following them, there is a gap. Gap for two reasons. One, for their own internal reasons. One, also that ease of doing business which we talk about in India, at times, they face challenges with the government, with the bureaucracy and this, that. So governance as a mixed bag is there in the market, but with SME, the highest standard of governance is probably little away. So Raghav, in your experience, what can corporate India do on governance which eases financing options, add value and create comfort for the financing platforms?
Yeah. No, so I think I would say that corporate India standards on governance have clearly been decent, right? So I think the market, as we see, especially the companies, right? I wouldn't say, especially at exclude the SME companies, right, which are just coming out. But if you look at the growth capital companies that we typically invest in, right, 500 crores, 1,000 crores in size and beyond, right, from a revenue viewpoint, governance standards have been improving. And clearly also with the other thing that we see is with the succession change, right? Succession in most businesses, the next generation is much more open, right? To potentially align and create value and also be more aggressive in becoming a more global business, right? And a larger business. So as a result, if they want financial partners to come along in that journey, they clearly, right, have to toe the line on improving and adherence to governance standards. So for example, historically we used to say Big Four audit is a key one that is a checkpoint. Now most companies that you go for already have a Big Four audit, right? Big Four auditor as a stat auditor. So I think clearly standards have been improving, and also obviously from a government push itself, right? There has been a serious push by the government to improve standards as well as disclosures with sort of regulators like SEBI and RBI in the mix. So I would say that generally standards, obviously there is an occasional accident, which I think is something that you can't rule out. But by far we believe standards have generally been, right, much more on the sort of decent side.
Thank you. So I think I think we're left with some 7 to 10 minutes. If there are questions from the audience, before I raise any question, you are welcome to raise any question from the audience, please.
Yeah, thank you everyone for your insightful inputs. The question from, I'm Vikas Sharma, I represent Informex Ratings Credit Rating Agency. The question from all of the panelists is that what